What a week in gold, ladies and gentlemen. Gold is traded down 0.4%. It's now in the 23.10s midweek as a stronger US dollar and lower treasury yields followed the weak US jobs data. The S&P Global Ratings lifted their gold price forecast past $2,000 for the first time. That's 2,000 US dollars. And new figures out are showing emerging market banks led by China remain the driving force for both purchases and sales. China demand is unrelenting, with apparently young Chinese female buyers the standout segment. And also in this week's news, Chinese-owned gold mines in Niger ordered shut after herders reported animal deaths from drinking wastewater. On some better news, Bellevue Gold has started switching to thermals and renewable power, and Northern Star Resources turned on the solar farm at their Porphyry gold mine. The ASX gold index was up almost 2% yesterday, and the price right now, 23.15 in US dollars. And that is 3,515 in Australian dollars. They never mention that on the news in the morning. So 35.15 Australian dollars. It's Wednesday, May the 8th, 2024. I'm Kerry Stevenson. I'm that gold lady. Joining me today, well, before I start, actually, I'm also the founder of the Australian Gold Conference. We have 101 days and counting. And also this new nifty gold official podcast. Joining me today is Alex Scanlon. He is the founder of Barton Gold. The ASX code is BGD. He's also a financial economist. Welcome, Alex. Great to see you. What's your take on this week?
Look, I don't want to get ahead of the true expert, Nicholas Frappell, who's also joining us today. But from my standpoint, what I think is really interesting when we look at sort of longer term trends in the gold price is how quickly and tightly the gold price has consolidated around this $2,300 level. I think many people would have assumed a gold price declination that would be greater based upon a faulty assumption that its upward movement was a speculative move. What we're really saying, I think we would all understand, is the sort of resetting of the global gold market as physical flows move east, as gold is remonetized. And I've been really interested to see in the past week how tightly gold is consolidated into a tight trading range instead of going into a much more volatile arc of pricing.
Well, also, thanks, Alex. Joining me also today is Campbell Olsen. He's the founder and CEO of Arete Capital. He's got a very long career in private equity and also operational management in the mining industry. Welcome, Campbell. Thanks so much for your time today. What's your take on what's going on out there?
Great to be here, Kerry. Your guess is as good as mine.
There we go.
Look, there's a lot going on. We can see a lot on the surface. There's a lot going on underneath globally in the sector at the moment as well. We can see a definitive attempt to debase the US dollar, new settlement currencies coming in, gold being elevated to tier 1 status under Basel III last January. So there's a lot of jockeying, a lot going on. We're trying to keep a bit of an eye on it, but I guess our view is that we're not hedging anytime soon in production. So, we said 12 months ago, someone asked, and I said, 2,500 by Christmas this year. And I probably got laughed at, but probably should have said 3,000, but who knows? I mean, I've got to say that because we're gold producers, right?
Well, there is that, and let's see what the price will be like when we come to the Gold Conference, which, by the way, ladies and gentlemen, 26th to the 28th of August at Crown Towers here in Sydney. So if you haven't got your tickets yet, go to goldevents.com.au. It's going to be an absolute cracker, and very handsome gentlemen will also all be there. Now, without getting back to you yet, Campbell, I also want to welcome Nicholas Frappell. He's the global head of institutional markets for ABC Refinery. Nick, welcome. What's your take?
Thank you, Kerry.
By the way, I know you presented yesterday at the RIU conference, which is where we all are at the moment, ladies and gentlemen, a fantastic conference at the Hyatt. So if you're here over the next day or so, make sure you come and say hi to all of us. But for now, Nicholas, good presentation yesterday. What's your take on what's going on in the markets?
Well, the broad thing is that gold is in a positive trend. It's obviously being massively helped by demand in Asia generally and in China, as Alex said. We saw over 500,000 tons of withdrawals from SGE. But I do think another factor, which I did mention in my presentation yesterday, which helps explain the rapidity and the steepness, if you like, of the climb in gold, was some extra punch given to the gold price by upside options in both the OTC market and in the futures market. There's quite a lot of open interest. The price went up towards quite a few of those strikes. And I wonder if, further to Alex's comment about the 2300 level that we're very close to now, that there's probably quite a lot of open interest around the 2300 US dollar level, and that might keep us a little bit pinned to that level. So, dips below that might quickly return to 2300, and likewise for the short term at least, rallies above it might, there might be a little bit of magnetic attraction to that price level, just dominating the short term. But look, we're in a bull market. I think if we had a bigger retracement, I don't think that would change that at all. There's plenty of support, and I'm sure scope for dip buying, even if we fell another $100 or $200, given the, if you look at the big picture of where gold is and demand.
Yeah, we're back,
that's
baby.
my sort of quick take.
We're back, baby. Gold is back. Now,
Yes.
by the way, ladies and gentlemen, these are just our friendly opinions. It's not official advice. You can get that responsibly somewhere else. But let's dig into a couple of things here. The S&P Global Rating lifted the gold price, their 2024 gold price, past 2,000 US dollars an ounce for the first time after the 3 revisions. So going back to what you were saying, Nicholas, it feels like there's definitely a strong floor on the gold price. And I don't mind whoever wants to jump in here, but really that central bank buying strength has also continued into 2024. We've got emerging market banks, that driving force as well. Anyone want to make a little comment on that, or even a big comment?
I could probably opine. I think it's very interesting to see a gold price forecast of $2,000, and we're sitting at 2,300, and the biggest buyers in the market are price insensitive buyers, right? Central banks do not care what the price is if they must have it to transact in a non-dollar economy. So, I think a little bit of that is the sort of the analysts showing up late to the party. And I do think that many of them are still resisting the idea that there is this structural shift emerging in global monetary systems in the shift from a monopolar to a bipolar currency system, where you have US as one net issuer, China as another net issuer, and essentially gold that will be the clearing bridge between participants in various different pools or between those pools. So I just think that's interesting. I think we'll see a period of rapidly escalating revisions as analysts then start to sort of outdo each other to be the most right and get on trend with this first.
Yeah, it was interesting. I think, Campbell, you mentioned that 12 months ago you said 2,500, but you should have said 3,000. You're pretty bullish at the moment, mate.
Yeah, I think so. Other than the fact that, I have to be. And I can only echo the comments of Alex there. We're seeing a lot of, somewhat confusing action. It's quite clear, gold-backed settlement currencies are around the corner, or, not far away. They've passed white paper status in places like Russia and China, and the BRICS Plus have gone on. They clearly want to get away from the US dollar. I think there'll be if they're going to move forward aggressively into this gold-backed settlement currency, there's going to need to be a price at some stage. I don't think we've seen it yet. That'll be set by those issuers, I would imagine. And, Nick and Alex have probably got views on that as well. But, we're still bullish, if not for the turmoil, certainly the strategies that are out there, the BRICS Plus and Saudi and traditional US dollar friends have sort of signed on to this type of concept now. And that represents a significant portion of global trade and population. And so it's going to be, we think probably a reset somewhere in the fiat currency systems, somewhere in the future. I don't know what it'll look like, but certainly, when every bank in the world, Reserve Bank, is buying as much gold as they possibly can. Something's up.
Yeah, follow the money, isn't it? Nick, what are your views on sort of the BRICS? And I don't think we're ever going to go back to a gold-backed currency per se, but what's your view?
Well, I'm not a believer in that at all, I have to say. Secondly, looking at what the official sector is doing, I think they have, plenty of good reasons to buy gold. I think in January and February of this year, they bought around in the realm of 60 tons, which is roughly pro rata. I think, again, like slightly repeating what I said yesterday, pro rata is similar to Q1 of 2022, which turned out to be a really, really strong gold buying year for central banks. So reading, into what happened in the first couple of months this year is probably a little bit too patchy data-wise, but it could be a very, very good year for central banks. Or if they carry on in the same vein, it'll be a bit so-so, but it'll be nonetheless positive. Look, I think that central banks, firstly, at like a high level, those central banks that are comfortable with buying gold have good reason to buy gold in a world where there's increasing schedules of debt issuance, not just the US, but also Japan and so on. When it comes to the concept of, well, looking at China as one part of the sort of, I say, a bipolar world, the one caveat I would attach to that is that yuan currently is not a convertible currency. And if it was, I think there would be horrendous capital flight from China. That's the reason why it's not a convertible currency. And if it was a gold-backed currency, which I don't, that could happen because, lots of things can happen in the future. I think that they quite possibly they'd find a lot of their gold fleeing the country as well, a little bit like America in the late 60s when, people sort of question the value of the dollar given all the sort of, fiscal sort of profligacy over there. So I'm not sure that we're that close to a world where the Chinese yuan is a one part of a, two-tent kind of poles world. It maybe we are, but I would be a little bit cautious of that. It's a huge economy, but a huge economy doesn't necessarily make for a kind of a world where everyone wants that currency or everyone is going to trade in that currency. When it comes to BRICS, it's such a diverse array of countries and so on. That in terms of having a kind of like a coherent shared currency or view, I think that again I would be I'd sort of wait and see, I guess, but I don't think that is a likely outcome. Optimal currencies don't spring out of such a diverse range of currencies, cultures, and economies. That's my short take.
Yeah, and it's kind of
probably
like,
my long take too.
It's like when the Euro started, and all getting all those countries together, it's becoming a bit of a mishmash at the moment.
Yeah, there were stresses there, and that was a much more optimal currency zone than some others.
Watch this space, ladies and gentlemen, because I think the BRICS
got my details.
Well,
Say, sorry,
something in the background there. Tell them to be quiet. It's interesting. The BRICS will be meeting, I think it's in October of this year. So it'll be interesting to see what comes out of that. Are you following that much, Campbell? The sort of the BRICS and what's
a little bit. I'm a little bit of a different view to Nick. This is not something that will happen overnight. The Chinese have a saying, bit by bit, then all at once. To keep an eye on what's been going, particularly between China and Russia. And incorporating these concepts, they would like to get away from the US dollar as a settlement currency. What that ends up as, who knows? Whether it's a new currency or a Russian currency, but the intent is to have it gold backed. So that is, it bifurcates, if you like, along the lines of Alex's comments. They're steaming towards it. When will it happen? Not sure. How much gold can China rustle up? Officially, how much do they have? Is it 5,000? Is it 30,000 tons? You just don't know, right? And similar with Russia, and we'll never know with China. And gold can't leave China anyway. It can come in, but it can't come out. So it'll just be interesting to see what happens. At the end of the day, there's very little we can do about it. It's very little spoken about it. So we've just got to, keep producing. And, well, there's nothing we can do. A bit like, the foreign exchange. What can we do? The only answer we have is hedging. And I don't see the turmoil leading to a decline. I get, comments about open interest and all that sort of stuff, but the Basel compliant synthetics, if you like, need to be gold back now in those countries that are to delivery. I saw, Germany, was it last year, took 3 months to get 300 tons out of the US because it was hypothecated essentially. So we don't know what's going on in there, but everyone's trying to hold on to their gold, and it just, much smarter people than me are still confused.
Yeah, well, I think there's a bit of confusion out there. And also, ladies and gentlemen, what we're doing with these weekly updates for you is trying to get you, our audience out there, to understand pretty much gold is money, everything else is credit. We're living in a world awash with credit, and the debt is just increasing. But before we get on to our next points, I just wanted to also let you all know that we have the Gold Industry Awards this year will be on Tuesday, the 27th of August. It's a sit-down dinner at the Australian Gold Conference at Crown Tower, Sydney. And spoiler alert, I've got Vince Sorrenti, the comedian, as the MC. Might be roasting a few you guys as well. Now, Alex, Bell Potter just put out a note tipping Regis Resources as a standout. Barton Gold's a pretty good standout as well. Now, this is not an ad for Barton Gold, as I said right at the start. Do your own research. But Alex, Bell Potter tipping Regis. What do you like Regis Resources? I know that you're the founder of Barton Gold, but they've done quite a good job, haven't they?
Yeah, look, Regis has a lot of similarities in their development methodology to how we look at large scale bulk open pits. I mean, they were, as a company, their sort of foundation of strength came from the development of the Duketon project, and now they're looking at the McPhillamys project in New South Wales. And so these are similar to our sort of favorite approach. These are large scale, continuous bulk open pit resources that are what we might think of as lower grade. These are sort of 1 gram style ore bodies, but they get efficiencies of scale both in capital and operating costs that allow them to be more flexible, and ultimately it has tended to be in history more profitable and less constrained than deep underground high grade mines. So I think one of the things that will have put them in more favored territory with many market analysts is the fact that they've now cleaned out their hedge book. And that's something that people have been talking about very widely in the market. And of course, we know markets are this pure psychology wrapped around simple facts and simple fundamentals. It's long been something hanging around their neck that they have had all of their production hedged so far forward at such a low price relative to where the gold price has come. So the fact that they've now bought out the hedge book, I think will have a lot more people looking at it with, let's say, hopes and expectations about potential performance. And then if they can move McPhillamys forward, are they themselves an acquisition target for somebody who wants to make the jump from Australian mid-tier to Australian major, 500,000 ounces to 1 million ounces style of a producer? That Regis' success is part of that sort of chain of very profitable, very successful bulk open pits that was developed by the team that has now developed Karlawinda for Capricorn. So they've got some very strong fundamentals in how they go about doing things. And then I think that sort of, there's some real cultural value in that.
Speaking of that sort of cultural value and also that sort of equities thing, but just for our audience out there, Campbell, private equity and what you're doing, what do you think people should be looking for when they're looking at equity? Because a lot of people, they look at gold and they'll go and they'll buy from someone like, Nick at ABC Bullion. By the way, ABC Bullion have got a refinery as well, which is pretty cool. But are there particular things people should be looking at in these markets, Campbell?
Well, look, yes, there is. Primarily, for people like us, it's a couple of things. It's, number one, the team. behind these sort of operations, track record, and, are they capable? Are they experienced? And then it's the quality of the assets that they're looking at. And, quite often, what we would always say is, when one of these companies crashes, it's generally not a huge problem with the asset. The issue is generally at the corporate level. There've been bad mistakes, there've been bad management, there's been, as Alex said, full hedge book, all that sort of stuff. And that's a requirement for a lot of listed companies. For us, most of our work is unlisted and private and remains that way, and can make us a lot more efficient. We can make a lot more money at lower grades. But we focus primarily on those two key issues. So, if you're confident in the management team and the asset looks good, and you do some reading on it, it's not just something you go and talk to your taxi driver about. Do a bit of backgrounding on it, because everyone's got a tip. Everyone's got a tip, and very few people have got the knowledge. So I can only say, do the homework, spend some time on it, talk to some people. There's a lot of information out there available on different views, and look for different views. But again, it gets back to two things: the quality of the asset and the team.
Yeah, and it's, I'm Rick Rawle and I speak often, and do you know what, Campbell? He's always saying, first of all, look at the team, but also do your own research. Don't listen to the taxi driver. Don't listen to the barbecue mafia. You've got to work. If you're going to listen to the barbecue mafia, you're going to make mistakes, and it's going to cost you. Now, speaking of which, instead of going to the barbecue mafia, Bullion Now, who are a fantastic company based in Melbourne, they are sponsoring our educational evening. Now, ladies and gentlemen, this is on Monday, the 26th of August at Crown Towers. It is free to attend. So for those of you that say, can't come because I'm working, or I don't want to spend any money, well, guess what? I've made it free, and I made it after work. So we're going to have 2 hours of some really smart people explaining to you all the different ways that you can buy gold, from physical bullion to the equities to ETFs, everything that you can possibly want to know. And after that, Barton Gold have decided we need a DJ, and we're going to have a bit of a party from 7 p.m. to 10 p.m. So go to goldevents.com.au, buy your ticket, book your ticket, get your tickets, and we want to see all of you there. Why? Because all of us that are talking to you today, we're passionate about helping you to understand how to protect your purchasing power with these crazy people that are in charge that keep printing the paper currency into oblivion. And gold does what it's always doing, which is it protects your purchasing power. Right. Last comments are going to go to my beautiful guests this week. And let's start with you, Nick. You've been sitting there patiently. Last comments for the week, your forecast or things to look out for.
I think the important thing to look out for in the short term is really how the sort of interest rate expectations are for, primarily for America, because that's really the sort of the center of things, but also for the Australian audience, what's the RBA doing and so on. Is it going to be higher for longer? It looks like it will be higher for longer, but that's a fairly fluid thing. I mean, in the US, the expectations for rate cuts this year have changed from barely one in the last month or so. That's one between now and December, to roughly, maybe two normal size rate cuts. And again, I think it's important to look at how that evolves for Australia as well. The longer term thing, which is a real sort of who knows, but I really hope that they grapple with it. I think we all have the same feeling, is can we get a sort of we'll probably get to the absolute tipping point, but some kind of bipartisan agreement on what to do with US tax and spend. Don't think they've got a lot of scope to cut spending, but they've got to get some kind of like adult arrangement on around about tax and so on, because absolutely, I think one of the themes that we've all been talking about indirectly or directly is just the degree of the sort of fiscal incontinence that the US, and not just the US, but I mean, it matters because it's such a huge economy, that's something that has to be grasped. I don't think it's going to be grasped this side of the election cycle. It might not be grasped this time ahead of the next election cycle, but at some point it has to be. dealt with in a kind of a sophisticated fashion, and so far we're not seeing that.
Thanks, Nick. And an important point to make. Yes, it is a US election year, so things are going to be very interesting as we head towards the end of the year. Campbell, what are your thoughts?
My final thoughts? We've been watching what we call the lag effect, you know, in gold producers, public gold producers, you know, and there seems to be, you know, some the increased price is not reflecting evenly across the board on the producers. And, you know, we've been talking about this internally quite a lot, and, you know, I'm not sure that the wider investing community is yet convinced of a new effective clearing price for gold, whereas we're very bullish on it. And I think there should still be upside in the producers' share prices, you know, from that realization that, you know, gold is not going to drop back to 1,700, for example. And I know we were looking at long-term consensus forecasts earlier in the week, and, you know, they're all still, you know, 30 out of Toronto, you know, 30 analysts, they're all still saying long-term $1,700.
Oh,
You know,
really?
short-term, you know, 2,050, you know, that sort of stuff. But, you know, they're still taking a very conservative approach, and that filters through the market. And I think over time, we'll see that reflect in the producers and the near producers. So I still think there will be upside for the wider investment community on the quality producers. You know, there's still bad, there are still bad companies out there. You just got to do your work and sort and put them in the, you know, go straight to jail basket.
Love it. Go straight to jail. Do your own research. Alex Scanlon, final comments from you, sir.
Yeah, look, I'm probably in a similar basket to Nicholas. One thing I'm watching very closely is not necessarily what the US Fed or what the RBA is saying about what they're going to do with rates. I think they're pretty clearly in a box where any direction they lean, they're getting cut by glass and spiky things. What's got me more interested are the underlying economic figures that are sort of driving their responses. And they're making really political responses and political guidance to things like jobs reports and inflation figures. And we've seen the constant manipulation and changing of how inflation is calculated, and it's still not bringing inflation down. You know, that is a legacy of the profligate money printing, which happened in particular during COVID, but it really started back in the GFC. They just never turned the printing presses off. What that has led, and almost taking a cue from Campbell's leg effect, so thank you for the setup. What that has led us into
You're buying lunch, Alex.
it's yours. What that has really led the Western consumption-driven markets into is almost an economic policy of profligate spending. So the U.S. federal government gets most of its receipts from capital gains receipts, right? So that is something that comes from, broadly speaking, the upper class, the wealthiest portion of the economy. The vast majority of the population has been encouraged to take this profligate printing and cheap credit to buy things that they either can't afford in a real rates environment, or to just buy toys. And one of the really interesting lagged effects that has just come out is data around U.S. consumer savings. The so-called COVID savings of United States consumers was about $2.1 trillion. So during COVID, with all this free, cheap money that they had been piling up, they couldn't spend. They had $2.1 trillion. We're about a year down the pipe from that saving having been topped out, and it's all gone. So in the past 14 months, the US consumer has spent all $2.1 trillion of those savings that they got during free money, which suggests both strains in their cost of living, but also the ability to continue their lifestyle or service the debts they probably already have is now going to be very strained. So where we have already seen gold break away from the question of are rates going up or rates going down, gold basically doesn't care. Gold has broken away from that 50-year rule. To the extent that the Fed has essentially become more of a political player, it is in a dilemma. And I suspect they are going to lean much more towards a consideration of a cut in a few months' time than they might have, despite higher inflation, because they are going to have the average American screaming for relief from interest rates because all that money is gone and they are all on adjustable rate mortgages. And that is going to make life very difficult, and that's going to make life very political. And Jerome Powell has demonstrated that he is nothing if not a political animal.
Wow, what a way to finish up, ladies and gentlemen. I hope you enjoyed our weekly update. My thanks to Alex Scanlon, Campbell, Olsen, and Nicholas Frappell. You'll see all of them at this year's Australian Gold Conference. If you haven't done so yet, go check out all 3 of our events at goldevents.com.au. But I'm that gold lady, Kerry Stevenson. Thanks so much for joining us. Thank you, guys.
Thank you.